Lords and blessed investors, I'm Nicole Purvy from Better Than Success, and here is the real estate news that you need to know for Monday, April 10th, 2023. Mortgage rates just dropped again. Is it enough to save the spring housing market? According to Realtor.com, mortgage rates trickled down this week again, marking its fourth straight week of declines. But is it enough to breathe new life into the spring housing market? For the week ending April 6th, the interest rate for a 30-year fixed-rate home loan averaged 6.28% according to Freddie Mac. Although that's much higher than a year ago when rates were at 4.72%, it's still at least down a bit from the 20-year high they reached near the end of last year. Compared to the recent 7% average rate peak, the latest rate saves $140 per month for a home buyer on a $300,000 loan. Let's take a deeper dive into the stats. Number one, listing prices for the week ending April 1 are still higher than last year, although barely so, growing by 4.4%. Number two, another downside for buyers is that the week ending April 1st was the 39th straight week where fewer homes listed for sale. Fewer levels on fresh new home listings continue to strain home sales, which continue to remain at low historical levels. Number three, while the total number of real estate listings is up by 53% compared with a year earlier, many of these housing options are stale, picked and passed over already. On average, listings lingered around 18 days longer than at this time last year, a continued sign that buyers aren't impressed by their options. Number four, home listing prices are advancing at a slowest pace since June 2020 and might slow further. Number five, it is expected that the time on market will continue to decrease this spring as we head towards the annual best time to sell a home in mid-April. Nevertheless, sellers will continue to adjust their expectations and pricing to account for the current market conditions. Investors are purchasing more single-family homes than ever. According to ScriptsNews.com, new data from data analytics companies show that real estate investors have been buying up more of the housing market in the last few years than ever before. According to Pew Charitable Trust, investors bought 24% of single-family homes purchased in 2021. Since 2012, that number has been between 15 and 16%, making 2021 fastest year-over-year increase in 16 years. In 2022, that number peaked at 28% of single-family home purchases. Here's the sentiment from a member of the Private Equity Stakeholder Project. It really is directly impacting people's ability to achieve the American dream, that people are being shut out. According to CoreLogic, only 15% of homes purchased by investors in March of 2022 were resold within the following 6 months. It's worth showing how these investors are splitting the pie. The CoreLogic data shows that of the 26% of homes that were purchased by investors in the third quarter of 2022, 49% were small mom-and-pop investors, fewer than 10 properties. 33% were medium-sized investors, 11 to 100 properties. 8% were large investors, 101 to 1,000 properties, and 11% were mega investors, companies that own more than 1,000 properties. A hidden time bomb? A Big Short investor sees financial disaster brewing in housing markets. According to CNBC, Dave Burt, CEO of investment research firm Delta Terra Capital, was one of the few skeptics who recognized the housing market was on the brink in the collapse of 2007. Now he believes an overlooked and unpriced climate risk could see history repeating itself. Burt said Delta Terra's research suggests that 20% of U.S. homes have meaningful exposure to a mispricing issue because of flood risk. If realized, he warned the fallout could resemble the extraordinary correction seen during the global financial crisis. Burt said, "We think of this repricing issue as maybe a quarter of the size and magnitude of the global financial crisis in aggregate, but of course, very, very, very damaging within those exposed communities." Burt says some of the cracks are starting to appear in terms of the cost of insurance. He noted the recovery in Florida from Hurricane Ian was an issue he's watching closely, particularly because this storm surge exposed a flood insurance nightmare for homeowners. Jeremy Porter, head of climate implications for First Street Foundation, told CNBC that the biggest reason why it matters from our perspective is that climate risk isn't being priced into the housing market. The FBI says these are the homeowner scams to watch out for now. According to MSN, the FBI found that people lost over $10.3 billion to online scammers in 2022 alone. And one of the most cost-effective areas of exploitation for these criminals is the real estate sector. Here are the top real estate scams to watch out for. Number one, real estate wire fraud. The FBI says this is one of the most financially damaging online crime. With this scam, con artists target homeowners who are making large wire transfers for various real estate transactions. Often the criminals pose as parties of the transaction and directly communicate communicate with the other party to steal funds intended to pay for the real estate. Number 2, home repair scams. This is where criminals appear in person and charge homeowners in advance for home improvement services that they never provide. Number 3, disaster relief fraud. This is where con artists will also attempt to gather donations for fake charities or commit insurance fraud after a natural disaster, which could end up re-victimizing people whose homes have been damaged. Number 4, mortgage modification scam. This is where scammers will offer to modify or refinance their mortgage at a very low rate, but they'll charge upfront fees. However, the criminals do not provide any real assistance and may even trick homeowners into signing over the title to their homes.